Assalamualaikum warahmatullahi wabarakatuh. My name is Nura Anshafika binti Muhammad Sudin. For company analysis, we have chosen PBB Group Berhad. Okay, let's see what company is this. PBB Group Berhad was established in 1968. This is an investment holding and property investment company listed on the main market of Bursa Malaysia Securities Berhad, the Malaysian Stock Exchange. These businesses are principally divided into 5 business segments, which is grain and agribusiness, consumer product, film exhibition, property investment, and other operation. Under grains and agribusiness is a flour milling, animal feed milling, and livestock farming. Other than that, for consumer product, they presently distribute a wide range of fast-moving consumer goods under its own brand, as well as other national and international brands due to its robust distribution network. The film exhibition provided by them is Golden Screen Cinema Senjam Berhad. Over the years, the property division of the PBB Group has established a solid reputation for creating high quality, thoughtfully planned residential, retail, and commercial space. Last but not least, for manufacturing chemical, they manufacture formalin, adhesives, and other intermediate resins, as well as pronounced microphones for various industries. For year-to-year changes analysis, we can see sales for the PBB company increased in 2021 from 2020 with a big amount, but due to the cost of sale also increasing with a big amount, it affects the gross profit where it was decreasing in 2021 from 2020. So, to increase gross profit, the company needs to reduce the cost of sales, such as obtaining raw material that are low in price but still of high quality. Meanwhile, earning after tax for this company increased in 2021 from 2020. It is because tax expenses reduced a lot. It shows a quite good because they can reduce their tax expenses.
Hi and Assalamualaikum. My name is Berhad binti Syarul Azman. Now we move to the trend index number analysis for statement financial position and income statement. This analysis is calculated from 2019 to 2021. We set 2019 as the base year. From the deferred tax asset, it is drastically increased from year to year. This is because the company has recognized the deferred tax asset based on the probability that sufficient taxable profit will be generated against which the deferred tax asset can be utilized. As we can see from the PPB Group Berhad current asset, it is decreasing by 4.97% from 2019 to 2020 and proceed to increase to 117.25 in 2021. This shows the highest value of current asset out of the 3 years. Next, we go through to the total current liability, which has decreasing by 13.97% from 2019 to 2020 and has drastically increased to 154.72 in 2021. This also shows the highest value of the current liability. On the other hand, the PPB Group Berhad may have high risk since the current liability are slightly higher than the current asset. Then, the revenue of the company in 2021 had an increase by 14.24% compared to the previous year, which is 2020. Then, we move to the profit of the year gained by PBB Group Berhad in 2021, which has increased by 25.67% compared to the base year 2019. Profit in the year 2021 is the highest profit out of the 3 years analysis. Hence, we also can see the other expenses drastically decreased from 2020 to 2021 by 99.34%. As we can see, the company expenses are decreasing from the year 2020 to 2021. This gives a positive impact to the company's profit as it increases. Then, the company should maintain the lower expenses so that they can improve the profit for upcoming year.
Hello and Assalamualaikum. My name is Nur Zahida binti Zulkafli and today I will present about common size balance sheet. Common size balance sheet provide insight into a firm capital structure and how it compares to its competitors. So, based on the balance sheet's common size analysis of PBB groups, it shows that the composition of assets, liabilities and shareholder equities accounts slightly changed from 2019 to 2031. As a percentage of the total asset, the company is doing well since it is carrying less cash than the past 2 years. This means that the company is fully utilizing their assets. However, their inventory level is increasing, which is not good. With that, the company can re-examine the service level to decrease the inventory level. As we can see, managers prefer that expenses to decrease over time and profit figure to increase over time. By looking at this income statement common size analysis, it shows that the gross profit for PBB Group's performance is decreasing from year 2019 to 2021. This is because the cost of goods sold is too high and shows an increase from year to year. Therefore, improvement in cost management, productivity, or the adoption of new technology can reduce the percentage of cost of goods sold, resulting in a higher gross profit. Next, I will go through the PBB Group's Berhad financial ratio. There are 4 types of ratio segment which are liquidity, efficiency, solvency and profitability ratios. First segment of liquidity ratio is current ratio, where it determines a company's position and its ability to meet short-term obligation. As we can see, the current ratio in 2021 is slightly lower than in years of 2020. The ratio is still more than 1, indicating that PBB companies can still meet their short-term obligation within a year. The decision rules for the current ratio is that the higher ratio is better. Next is net working capital for 2020 and 2021. The net working capital ratio is positive, indicating that the PBB groups has more current asset than current liabilities. Although the net working capital in 2021 is smaller than 2020, this is still a positive sign because having too much net working capital is detrimental to the PBB group. For the second segment, which is efficiency ratio, the fixed asset turnover of PBB's group displayed that in 2021, the ratio is increasing from the year of 2020. This means that the company is able to generate RM0.21 of sales from RM1 ringgit investment in fixed assets. The asset turnover of PBB Group shows that in 2021 is slightly increasing from the year 2020 with the ratio of 0.19 times in 2021, where in 2020 the ratio is 0.17 times. This shows that the PBB Group is efficient at generating their revenues in using the total asset at that year.
For profitability ratio, we have chosen gross profit margin and operating profit margin. Okay, let's see what we can conclude for this ratio. First of all, gross profit margin. The gross profit margin for PBB companies in 2021 is decreasing from 2020. The bigger the GPM value, the more profitability. It shows that the GPM for the PBB company is less than satisfactory because the profit margin is decreasing in 2021. Next, operating profit margin. The operating margin for the company PBB is decreasing in 2021 from 2020. It refers operating margin for company PBB is unsatisfactory because the higher the operating profit margin, the better one.
For the leverage ratio, we choose debt ratio and debt to equity ratio to measure the level of debt in the company. For PBB Group Berhad debt ratio, it is increasing by 2.72% compared to the previous year. But then, the debt ratio is still favorable as it less than 20%. This means that the PBB Group Berhad has only 8.09% in debt for every ringgit Malaysia of asset and it is in a good financial health. Then, The debt to equity ratio has increased compared to the previous year, but still favorable as it's less than 100%. This shows that it has only 8.8% in debt for every ringgit Malaysia of equity.
I am Faris Iman and I will present about the strength, weakness and suggestion for the PBB Group Berhad. Did you know that the Golden Screen Cinemas is a wholly owned subsidiary of PBB Group Berhad? GSC is Malaysia's leading cinema exhibitors with the market share of over 40% and the country's largest film exhibitors. GSC also hold a 40% stake in Galaxy Studio Joint Company, which runs the Galaxy Cinema brands in Vietnam. Other than that, GSC has opened the first 4DX hall at the GSC Paradigm Mall, Johor, Malaysia. Next, for the financial analysis view, the strength of PBB Group is the net working capital in 2021 is lower than 2022. Yet this is still a good indicator because having too much net working capital is unfavorable for the PBB company. A high working capital ratios means that a company assets are keeping ahead its short-term debt. A low value for the net working capitals near 1 or lower can indicate the companies might not have enough short-term assets to pay off its short-term debt. Next, the weakness of PBB Group. The cost of goods sold is too high and it shows an increase from year to year. The gross profit is reduced because of COGS is too high. The net income in 2019 is low because the sales are decreasing. A higher cost of goods sold means the company pay less tax, but also means that the company make less profit. This is something that need to change. Cost of goods sold should be maximized to increase the profits. Decreasing of gross profit margins mean that the ratio percentage is below industry norms and potentially down from the company's prior periods. In a sense, companies are not generating strong sales price relative to cost of goods sold, which are costs to make or acquire products. This is the problem since the company needs a strong profit to achieve operating and net profit. For the suggestions, we would like to suggest that to improve the low gross profit margin, PBB Group needs to increase the customers' demand and revenue to reduce COGS. More marketing, while a cost doesn't affect COGS and can help drive stronger revenue performance. Both training and emphasis on the sales processes can help as well. On the cost side, PBB also can negotiate better costs with the vendors or look for a lower cost option of similar quality. Reduce liability. For example, PBB Group Berhad can go weeks to produce its product, which is flour, without getting it from supplier. This can reduce their current debt by using their own crops. Indirectly, it can improve the company's current ratios. Next, invest more on promotions to generate sales. PBB Group Berhad can do promotions on the social media platform to let customers know more about what the company sells. This is because they have more sales in upcoming years. They will be able to pay their liabilities. Last but not least, if possible, group should cut down on spending to increase current ratio. Review the budget carefully and see where the company can reduce line item like marketing, advertising, labor and services. The more cash dedicated to operating company, the better current ratio will be achieved. Whenever possible, finance or delay capital purchase that requires significant outlay of cash.